What is up, friends? Chelsea Winstead here. If we have not met, I am a home financing strategist and a mortgage broker. I am licensed all over the US. I am based out of Wilmington, North Carolina, but my goal and intention is to give you information in a way that you can actually understand and digest. I think a lot of mortgage professionals do not understand how to break things down in a way that their buyers and their agent partners understand and actually feel like they can conceptualize. My goal is to change. So, big thing to kind of talk through today, two major things. Number one was the CPI report that came out last Friday, and then also the Fed meeting that is going to be happening this week. So let's kind of get into CPI report on Friday. So CPI stands for Consumer Price Index. This is essentially a report on inflation. So numbers wise, from year over year, so from last year to this year, inflation is up 3%, but from month to month, it rose about 0.3%. Now, the Fed wants this to sit at 2% or less. And so big picture, what you're often going to see is that when inflation is going up, mortgage rates tend to either hold steady or actually rise. When inflation goes down, that is more of a likelihood that we will see rates go down. And just for like thought, so CPI report basically tracks the prices of everyday goods and services. So things like groceries, gas, rent, utilities, clothes, medical cost. And then each month, the Bureau of Labor Statistics compares how much these items cost now versus last month and last year. So if prices go up, that means that we are seeing inflation. If prices have stayed the same or gone down, that is either disinflation or deflation. But the main thing that they are looking at is prices going up. And so inflation isn't always like a bad thing, just for you to know. Around 2% a year is normal and healthy because it is encouraging people to spend and invest rather than like hoard their money. But when inflation runs super high, which is what we saw a lot of in 2022 and 2023, money then loses its purchasing power, which means that like the same $100 that you had a year ago is now buying you less things. The bigger piece of this puzzle is that, when inflation goes up, a lot of the time paychecks do not rise at the same speed as the cost of goods and services do. And so when borrowing gets more expensive, the Fed then often will step in and essentially will sometimes raise interest rates to cool things down. Now, as a note, the Fed does not directly impact mortgage interest rates, but their essential stance and the statements that they make, the decisions that they make, there is often a direct implication in what we see in the mortgage market. And so the CPI report matters a lot. This is one of like the major pressure points when it comes to what the Fed decides to do. So they watch it essentially like a hawk every single month. And so as you're watching this, we are currently in the middle of a government shutdown, which means that a lot of the additional reports that the Fed and just like banking institutions use to make decisions, they are unavailable. So that CPI report was really like a big sort of like what's going to happen. What's kind of interesting is a lot of the headlines made it seem like, oh my God, like it's the highest it's been since January, which is true. But actually it's only up by 0.3% from last month. So it's not like going crazy, but also it did not drop. So depending, like potentially when that report came out on Friday, let's say inflation had like drastically decreased, we probably could have seen a much bigger movement in the market. But because of where the numbers were, we really just didn't see a major change. Okay, other big thing to know for this week. So the Fed is meeting this week, and essentially all markets are basically expecting the Fed to announce another cut on interest rates. But there's often a misconception here when it comes to this meeting. And I think because a lot of people don't recognize that the Fed doesn't actually directly control mortgage interest rates, things get a little bit confusing here. But so when the Fed cuts, often what actually happens is the market has already adjusted prior to. So like at the end of last week and early this week, we've already seen rates improve even before this meeting is happening. So even if the Fed makes an announcement that they are going to cut rates, it doesn't mean that there's going to be a direct match to mortgage interest rates cutting that amount. So like right now, we're seeing most interest rates hovering in like the low sixes to high fives, depending on the type of loan program that you're using. And when that announcement comes out, I think a lot of people assume, okay, well, if rates right now are sitting at a 6.125, then it's going to drop into the 5. But it doesn't actually work that way. Often there's actually no movement at all. Or what we've seen is that the market has already adjusted prior to that meeting happening. So don't fall into like the trickery of like, because what it really does is it sets your buyers up to be disappointed. Because if you are advising or telling buyers, or they think, oh yeah, the Fed made an announcement, rates are going to get cut, and let's say they've already been working with someone like me, or they haven't yet, and then they're expecting there to be this like massive change in what their monthly payment's going to be, they're probably just going to be a little bit disappointed. So just keep that in mind. Yes, when the rate is cut, often we do see movement in more of like a 60 to 90 day time frame, but immediately you're not going to see like a massive drop off in what people are paying. Now, I will say this. From your buyer's perspective, even with a cut that's announced, they're probably not going to see a major change in what their monthly payment is going to be. However, the bigger group of people that you all will see that are probably going to get a lot more movement from this is going to be your sellers. So one thing to note in the mortgage world and in housing, and you all know this, but it's all about perception, and it's the media and it's news and it's what people are saying. And so when the news shows that the Fed made another cut, even though for me on my paper, when I look at things, it really doesn't make a huge difference. It's the perception that it is going to make a huge difference. And that is actually what gets a lot of buyers back in the market. So for those of you that have had sellers like chilling and hanging out and like wanting to know when is the right time, if we get another announcement this week that the Fed is cutting, I do anticipate that we are going to see another big group of buyers jump back into the buying pool. Even our last cut that happened, you had a lot of people starting to like get interested again, want to reach out, want to run numbers. This second announcement is going to even further push that forward. So even if we don't see a massive dip in rates, more buyers are going to come to the market and be excited because of the media. The other piece of that is because more buyers are coming to the market, this is a great time to reopen up those conversations with any listing clients that you've spoken to and talk about how, with this anticipation, this is often when people get back into the market because of the media. And as always, we never really know what's guaranteed or what's going to happen, right? Like it just depends on lots of things. Government shutdown's a huge topic of conversation right now as well. But the reality is that with the Fed announcement, you're going to get more buyers interested, wanting to have a conversation. It's a great time to re-engage with listing clients. But just be aware that when that announcement comes, your buyer should not expect then their interest rate to drop by that same amount. That is often where the biggest disconnect happens. All right, y'all. 2 things. Number 1, if you are not yet on my nationwide directory, link below is going to have that available for you to pop in your info. I'd love to feature you on my account. As an FYI, I actually get almost all of my buyers directly through TikTok. I then pre-qualify them, pre-approve them, and then once they're ready to go, I then will match make them personally with an agent that is local to them. I am going to be leading into this new directory to assist me in doing that. So I would love to get your info on there if you are interested. Second thing, this is how I work with all of my clients on the buying side as well. I am very education focused, information focused, and making sure that everyone understands exactly what's going on every step of the way. If you think that I would be a good match with any of your prospective buyers and you're interested in having them run numbers with me to prepare to make a purchase, I would absolutely love to support you guys. And or if you have somebody who's wanting to list and then to utilize any profits from the sale of that home to then get into their next home, same thing. I would absolutely love to run numbers and see how I can be of support. If you have any questions for me, all my information is going to be below. Also, if you would like to get this update via email, this is also going to be linked below this video as well. All right, y'all. Happy Tuesday, and I'll see you next week.